Hi everybody, Chris Krashisnik with Remax Town Center giving you a real estate recap. I apologize first and foremost for not sending out an email or a newsletter last week to anybody who follows, the dozen people who follow. I'm sorry I wasn't able to do anything. I was very busy with work and with chores and everything else. So I apologize. I'm happy to get something out this week. On another note, my email address is changing. Ask me or personal message me on any of the channels to get my new email address, but it's chrisk@chrisk-homes.com. MRIS is doing away with email addresses in a couple months, and I want to get ahead of that. Okay, so on to the topic. One thing I get asked about is what's going to happen when interest rates go up, or they have to go up at some point in time, right? Yes, that's kind of inevitable. I don't understand how the Federal Reserve has kept rates at this rate for so long with a healthy economy, supposedly healthy economy. Put it this way. When the internet boom was happening and our economy we saw the biggest economic growth in 50 years or something like that, rates were in the 8s, 7s, 8s, 9s, floating around, bouncing around there. And we saw unprecedented economic growth. Now there was different circumstances. We're not seeing this technological boom anymore, but we're seeing robust economic development. However, rates are at 3.5%. Money has never been cheaper to borrow, and that supposedly incentivizes economic activity. It decentivizes savings and thriftiness, and it incentivizes spending, borrowing, and economic activity. Okay, so even with the incentivization of cheap capital into the marketplace, we're seeing in the bigger housing markets, steady, modest gains, what the professionals call stable. And in flyover states and less populated areas, we're not seeing growth. We're seeing flatline, or there's some places still in a decline. And you can still talk to a lot of families and a lot of areas, and it is not looking good. But anyway, so what's going to happen when rates go up? Rates, home values equal a certain monthly payment. If rates go up, values are going to go down to where that economy can support that monthly payment. Okay? So, the Federal Reserve or the powers that be at some point are going to have to raise their rates. Expect the demand of housing to go down and home prices to go down. How much, I can't tell you. I don't know, but do the calculations. Look at the difference between 3.5%, 6%, and 10%, and tell me what that end on a $200,000 mortgage is. It's significant. So, what do? There's always a back and forth. Do I buy now at a cheap rate and a higher value, or do I buy a lower value with a more expensive rate because I could refinance that new rate? What I tell people now is you want your house or your home as your primary investment. Take it out of it's your home. You're looking for stability. Okay? So if you can afford to buy now, buy now. Don't buy if you don't plan on spending the next decade in that property. If you own a home and you don't want to be in that property for the next decade, you should probably consider moving now sooner rather than later, because you don't know if rates go up, if the market's going to fall out on if your prices are going to go down or how much, and if you'll actually have the ability to sell your home. I'm painting with a very broad brush. You're going to probably want to talk to me, get with me on any of the channels, or instant message me or private message me if you have more questions. But don't overreact to this, but that's probably the scenario we're seeing ourselves in. Be that as it may, a home and property will never be worth nothing. Some assets will be. if the market goes bad enough. But that's the beauty of the housing market. People are always going to need shelter. Thanks so much for listening. I'm sorry I ran a little bit long. Have a great week. Enjoy the rest of summer. Happy back to school for all the people who are going to school. And have a good week. Bye.